The other big topic at this point is the fiscal cliff. If we don't do anything at all, if Congress doesn't find an agreement, it looks like maybe 5% of GDP would be shaved off, which probably signifies a deep recession in 2013. So both parties really have an interest in finding some kind of an agreement. What's your take on what may happen between now and the end of the year?
Well, I mean, the reality is, between now and November, very little. I mean, the parties are looking to separate and divide themselves so that they can gain leverage in the election. What happens after that's going to be kind of defined on how these key swing state races shape the legislature. You know, if the Republicans manage to gain the Senate and maintain their lead in the House and the White House, I think there's going to be an environment where there's a serious conversation about removing government barriers to economic activity. If they fail in any of those three, then I think the conversation becomes much more status quo. What are the things we absolutely have to deal with? The debt ceiling, the Bush tax cuts, and it's just more of a continuation of the present while they figure out how to position themselves for next year. And so, if President Obama's reelected, I think the conversation will be very much on who should be bearing the burden of the next government investment. I do think he really sees the government having to make another round of some sort of investment, whether it's some sort of subsidy provided by the Fed or the Treasury, or whether it's directly through government spending. I think that you're going to see that conversation unfold, especially if we start to go into recession.
Yeah. Right. But it'd be very difficult politically to advance that, given just how the Republicans feel about the current, fiscal.
Now, you notice none of this balances the budget. None of this reduces the debt, the velocity at which we're accruing even more debt. And I think for a couple of years that we're just going to be looking at slowing that down. I don't know that there's any sense on either side of the aisle that we have a credible plan for rolling this stuff back together.
Yeah. One of the, I think, ideas is can we grow our way out of it? And, that I think came about back in the Reagan years. Maybe the first Bush was talking about the first Bush's presidency. But part of Romney's campaign is he's talking about 4% GDP growth, which isn't a lot given given the improvement or the bottom of the cycle and a new cycle starting. But maybe we are a mature economy, and if we can get to 4%, we should be happy to see it. So possibly what Romney's thinking is that if he can put the right policies in place that and produce a higher level of growth, that will be essentially a good counter to the increased debt levels that have occurred over the years.
You bring up a good point and say, are we in a mature economy? And in fact, Larry Summers writing a piece on Financial Times a few days ago and saying it really doesn't matter who wins. The government will get bigger in the next few years just as a function of demographics. Are we really condemned to slow growth and to perhaps bigger government intervention just as a function of our demographics?
I think, sadly, that's also my opinion. I think either candidate won't have the guts to actually implement the programs and the cuts that are necessary to bring us into some sort of fiscal sanity. Unfortunately, we're going to probably see a muddle-through economy for a few years, whoever wins the race.
Fiscal policies aren't turn on a dime type of policies.
One of the issues are the divided Congress. Another issue is that in either case, you take Obama, you're going to see spending programs increase. They're not going to touch, either of the candidates are not going to touch the real crucial programs like Medicare and Social Security, because look at the demographics of voters. We have more and more old people voting, and they're not going to cut their own programs. It's just not going to happen. So I think one of the big problems is that we have to realize that something needs to change in terms of our outlook towards retirement, old age. We cannot continue to feed and continue the life, although it sounds a little crucial to say, we have to stop feeding the old people to actually take away from the young and to support growth in the economy. But that's mathematically and just logically, that's what needs to happen. But neither of the candidates will have the guts or the political will to put these programs in place.
So what's economically sensible, it's politically impossible?
It's politically challenging. I actually think that if we could get growth going, and I think that has to be the focus of any administration. And I mean, even if Obama wins, that's his goal when he makes the public investments. I think that if we can get growth going in our economy, we'll eventually end up inflating our way out of this. I mean, we've kept inflation incredibly low for a long time. And I mean, if you go back to the first Reagan administration, when we had inflation of, what was it, 14 or 20%
Right.
His plan was to freeze spending and let inflation balance the budget. And at some point, I think we're going to have to do that on purpose. I think we're going to have to intentionally introduce some inflation into the economy. And then we're just going to have to try and freeze our spending levels and inflate our way out of it. And I mean, there's really no other way. We're not going to raise taxes in this kind of a political environment, and we're not going to do huge spending cuts. I remember the Healthcare Reform Act has $500 billion in Medicare cuts in it. We're already on the books to cut $500 billion of spending, and we're not going to do any more than that for sure. And so, I mean, I think we're at a time where what you have to start looking at is what levers are there out there for our economy. And the most important thing is to get this thing rolling. And then you can start saying, okay, well, now I can throw a little inflation in, it'll slow it down a little bit, but it's rolling. But until we get the economy rolling, I don't think anything's going to change from where we are.
I agree with you in terms of inflation. What's your take? I do think that it's a ticking bomb that eventually will.
Yeah, well, I've been sitting here thinking about the size of the government, and certainly the demographics, the baby boomers getting on in their years will be additional cost to the government. I don't know if the government's going to. I don't necessarily see the government getting bigger because of that. And I think we might have learned our lesson with Iraq, possibly with Afghanistan. And I think we are now set to probably reduce the size of the military in favor of smart bombs or special ops or what have you. That's what some people are looking for or thinking, and obviously companies that are doing that, those type of weapon systems are performing pretty well. So possibly we can see the government in certain areas being reduced, but certainly the outlays for entitlements will increase, and that's because, again, the baby boomers and they're reaching their Medicare ages or are reaching the age where they will need additional help from the government. I'm also of the belief that a lot of the baby boomers are helping us with purchases of bonds and fixed income and helping to drive interest rates down as they adjust their portfolio allocations to income versus growth. How
can they survive on 150 basis points?
Well, I'm sure when they took that early out and thought that $1 million or $2 million or $3 million was enough to get them through, that I'm sure now many of them are thinking they should have done another 2 or 3 years. Also too, perhaps that's why the S&P is doing as well as because even though 10-year is trading at less than 2%, you can buy Verizon and get 4%, exactly. Right? Or Philip Morris,
or brings up the danger you were pointing out before of a change in the taxation of dividends, which I
right.
do think it would be a very bad policy.
Right, yeah. So how can we get out of this? I think it would be a very, very clever trick, or I think it would be a very, very wonderful outcome if we were able to inflate our way out of this. If some point 5-6 years down the road, if we were able to balance the budget. It's very, very complex. I think that we will need to take a hard look at entitlements. And I'm not talking about Medicare, I'm talking about all the other programs that we do have. And we're going to have to get people to take more responsibility for their own well-being. Maybe we'll have to, the federal government will have to reduce help to the states. And again, reduction in the military might help. Maybe a much more export-oriented economy might grow at higher rates than 4%, right? We're seeing some wonderful things happen in Latin America, Southeast Asia. Perhaps we're ready for China Chapter 2 coming up, and maybe we'll start exporting there as they go more towards consumption versus export-oriented.
But and I agree with you that the combination of inflation and exporting our way out
Or
would be,
growth. The bottom line is growth.
would be a great policy. But isn't that the policy that everyone on the planet is trying to really get going? Europe would probably love a much lower currency as well to grow their way out of the problem.
No,
Absolutely.
Europe just wants a good fresh cup of espresso in the morning.
I don't see the Germans signing off on an inflationary strategy. I mean, I think that's something that's just endemic
Right.
to their ways of thinking, that they're not going to go along with that at any point.
I
So for
agree.
them,
Howe-
it's just about
yes.
exporting at a lower euro if the euro survives.
However, the Germans, I don't know if it's intentional or super smart or just lucky, the Germans have really profited from this whole European crisis the most. For lack of a better
Politically
word,
or fiscally.
fiscally
Well,
and
both,
economically,
yeah, economically, certainly.
because a lower euro is going to help them.
Mhm.
Look at the German exports; they're thriving as never before, and they're not as dependent on Europe as it used to be and as it seems. In the initial stages of the European Union, most of their exports went into Europe. However, more than 40% of their exports are now outside Europe, and particularly China. And now we bring into the currency aspect, the euro is relatively weak against the dollar, but not really that weak. It's over 124 today. However, if you look at it, the percentage loss it made against the Chinese yuan in the last couple of years is dramatic. So for the Chinese, it gets more and more difficult to export their goods to Europe, whereas the Germans are happy exporting their Porsches and Mercedes over to China, who now are a little bit more wealthy, and certainly the clientele is able to buy these Porsches and Mercedes and huge machinery that they export quite happily
Yeah.
at a perhaps 10-15% discount to what it was a year ago. So
Isn't that really what a lot of people are waiting for? Is for the Chinese population to stop focusing on the exports and start, getting into more personal consumption?
I think it is happening on the basis that certain goods that are available overseas are now becoming relatively cheap for them as the Chinese currency appreciates in value against other currencies, not so much against the dollar.
Yeah. I think the U.S. trade balance with China also too is half of what it used to be. And getting back to the S&P, what really has fueled them hasn't been just the dividend plays as people look for bond surrogates, but also exporters have done very, very well.
Absolutely.
And have had tremendous earnings.
And I will say on China that perhaps the slowdown that is being showing in the numbers lately may be identifying a switch from an export investment-led type of economy to a more rebalanced type of
Consumption.
economy, more consumption-driven.
Well, the Chinese are also really good at sort of managing tax policy, especially at the local level, to even out consumption. I mean, I think that if you were to look sort of at China versus the U.S. and Europe, you'd see sort of more government effort to keep consumer spending down. And they really don't want that kind of volatility, I think, at this point in their economy. They're very happy being an export-oriented economy because that's bringing hard cash into their system.
Yeah.
And I think at some point you're going to see some shift in that as they have trouble finding clients for their exports.
But they have to, exactly.
Yeah.
It's
But-
again, it's not sustainable.
But until then, there's a lot of, I mean, it's just, you look at local tax policies, there's a lot of fluctuation, which just seems to be kind of moving money around.
There was an article that was out saying that there's now evidence of this very, very huge stimulus that the Chinese government has put into the economy. And I didn't have time to read the article. I'm not too sure if that was in the real estate area or consumption or business in terms of tax cuts to businesses or export credits or whatever. But the Chinese government is certainly involved. Yeah, and I guess given their, how would you say, hybrid nature, of being central as well as entrepreneurial, they're able to affect decisions very quickly.
But staying on the European subject, Angela Merkel, Holland, Monti, is this troika will be remembered for greatness or failure?
Good question. I think, similar to the US, I think the politicians themselves have actually a limited role to play in terms of really affecting economic outcome. But I think what will happen in terms of the equities, I think either way, whether the euro falls apart or it goes down to parity against the dollar, I think European equities are starting to look fairly attractive in terms of the valuations. If you look at Spain, I think the PEs are there probably 9, multiples of 9, with dividend yields of 8 or 9%.
Would you be interested in buying the Spanish banks?
I have started looking at them. I have started a couple of
Disclaimer,
weeks ago.
this is not investment
This is not-
advice.
I have started looking at some.
Yeah, that's the first place I would look at the financial sector.
I've also looked at Italy, similarly relatively low multiples, not as high dividend yields as Spain, but perhaps also less risk. And then equities in other countries. Germany has kind of outrun most of those markets, so they're probably a little bit ahead in terms of finding really good opportunities. But from that sense, whether the euro falls apart or not, if you own actual assets over the long term, I think you're going to be fine. And actually, having just been in Europe a month, what's very noticeable when you walk in the streets is the amount of foreign people. So nowadays you see a lot of Russians and a lot of Chinese faces, people with money that come to Europe, they travel, but they buy stuff. And they don't just buy consumer goods, they buy actual assets, they buy properties, they start buying companies. And that's an interesting play from a Chinese perspective as well as from a European perspective. So I think I'm not too concerned personally whether the euro will stay or not, as long as you're shifting your investment into real assets, equities, or property. I think you're going to be fine.
Also because the currency exposure can always be hedged.
Right.
So
Mm.